Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 129, Market Madness. All right, Cory, welcome back to the show.
Thank you. Feels good to be back. Thanks for having me.
Yeah. Anything new to report for our Upticks audience?
Aside from the market madness we're going to talk about, I don't think there's a whole lot new, but there's been a lot of developments on that front.
Are you still married?
Still married, happily married, in fact.
All right. Oh, wow. Happily married. Okay, cool. Good for you.
Got the dog who's doing great. He loves the snow. All is well.
All right, good. So for today's topic, I thought it makes sense to have both of us in, because if you're tuning in, thank you so much for tuning in. But if you've been paying any attention to the news the past couple of weeks, the market has gone crazy. The market is, and we're not going to name specific names or specific news platforms today. I'm going to keep it very general, but I want to explain what's going on. And I want to explain if we are going to participate or not. Okay. So let's talk about what's happening about this market madness. And what I'm talking about are certain stocks have gone hyperbolic and have shot up through the roof without much of a fundamental reason. And let's kind of rewind and go over it and explain it in English a little bit, what's happening. So you have these mega hedge funds. And Cory, why don't you define what a hedge fund is for our audience?
Yeah, so a hedge fund is an investment vehicle that's a little bit different than, well, it is different than, a mutual fund or an exchange traded fund, but typically they're ran by these kind of masters of the universe, people that have been managing money for a long time. They're given a lot of discretion in terms of how they can invest the money within the funds. And the regulatory oversight is much different than it is for like the relationship we have with our clients. And also the fees they charge is a lot different too. But ultimately it's a type of investment vehicle that investors can put money into that might be ran by a big hedge fund manager and some people on his team to try to speculate and invest money a little bit differently than usual.
Good. Yeah. I always like that term vehicle, but yeah, it's a company. A hedge fund is a business.
Yes.
That you can buy into. What's unique about hedge funds though, is they can do something called shorting stocks, which most mutual funds and financial advisors don't dabble in. And when you short a stock, you basically are borrowing money from a brokerage house, saying that you think a stock is going to go down in value, but you don't actually own the shares. So that's why it's a loan. So you borrow the money. If the stock goes down, you make money, and then you go buy the shares with that loan to shore up. So if you think if a stock's trading at $20 and you think it's going to go to 10, you quote unquote borrow it, right? So you sold it basically at 20, and then to shore up the trade, there has to be some sort of balance sheet factor there. You get to go buy it once it goes back to 10 or whatever price you set. And that's what a short is basically. It's betting against a stock or thinking that it may theoretically go to zero.
Exactly.
And actually, hedge funds were created as a way to protect your money, because a lot of investors were only just buying stocks. So these hedge funds said, okay, well, if you think the market's going to go down, and so do we. So hedge by its definition means protect. Right. But what's funny is, as decades have gone on, these hedge funds, like you mentioned, like you said, they take different investment approaches. And in fact, they've become, in many instances, more risky, because they're trying to make a lot of money. And they typically charge on performance, directly on performance, meaning if they make you 20%, they may take 4% of that off the top. They take literally a portion of the profits. It's commonly referred to as 2 and 20. So they'll charge 2% management fee. And then they'll take 20% of every dollar you make. They'll take 20% of it. So you only make 80 cents on every dollar. So they're heavily incentivized to make you money, these hedge funds. And like you said, they're far less regulated. Okay, right. So what happened? Well, these hedge funds were shorting quite a few stocks, right? Thinking they were going to go bankrupt. And I guess this got out there in the open market or whatever. And these group of people on these chat rooms or message boards said, we're going to try to take down Wall Street. So they all got together and they started pumping up these stocks and buying them and driving the prices so high that these hedge funds didn't have enough buying power to cover their loans. So they were forced to buy back these stocks at higher prices. And that's called a short squeeze, right? So they squeeze the short by forcing them to buy back these stocks. Now, what's crazy is, you have to be careful because these big hedge funds have a lot of money and they've got a lot of power. So, in fact, some of these brokerage firms that you do trades on, we're saying you can no longer buy these stocks because, and in my opinion, this is a form of market manipulation. Because if you're out there on a message board or in a chat room touting a stock and you're not a licensed, in fact, we can't even do that as licensed financial advisors, but you're artificially creating demand for a company. In my opinion, that's a form of market manipulation and it shouldn't be allowed. What do you think?
I don't know if we see eye to eye on that. I feel like hedge funds, especially if there's a bunch of hedge funds that have collectively been shorting stocks, they're manipulating the price downward. So what they've been doing for a very long time, they're just on the wrong side of this time. And I'm not saying that market manipulation I'm not saying that that is appropriate behavior. I'm just saying that it would be disingenuous to pretend that there haven't been hedge funds that have manipulated the market. Historically speaking, they're just not happy this go round because they're on the wrong side of it.
Okay, but I would argue that, and you're right, I think hedge funds absolutely have probably manipulated the market, but I don't think it is manipulating the market when you're just making a trade. I think it's manipulating the market when you're out on social media drumming up interest that has.
I don't see how that's any different than those hedge fund managers going on CNBC talking about why this stock is due to do poorly and they're trying to drive the price down.
Okay. Touche.
And that's the argument that the people on the internet, I'm not saying that what I think is right and wrong doesn't really matter because I think the whole thing is, it's fascinating, but it's silly and it's speculating and it's gambling. It's not investing. But with all of that being said, the people collectively on the internet that have gotten behind this whole movement have said, well, if these people can go on CNBC all day and talk about, what stocks they're buying or shorting and moving the price of those stocks around, why aren't we allowed to do the same thing on the internet amongst each other?
Yeah. And you're right, but that's one person, right? It's one person. They disclose that they are long or short that position. So you get some level of disclosure. But when you have, stock guy 343 anonymous out there, whatever, that's just a made up name. You're out there driving artificial interest with and that person on the chat board may not even own the stock. I have a problem with that. So
totally fair.
Yeah. And I agree with you though. We worked at a bank that I felt like they did that a little bit, right? They would.
Sure.
What is it called?
Yes.
Is it called sell side research?
Yes.
So, a lot of these big investment banks, they'll publish their research and get all their employee brokers to go tell their clients to buy XYZ stock or sell it, right? So I would argue that's a very form of market manipulation as well.
Absolutely. I think, in my eyes, what's so fascinating about this whole saga is just the fact that I think the sort of bigger story is, the decentralized nature of investment research, right? And the power of the internet. Like this is just a group of people on the internet that started this sort of trend. And then next thing you know, you've got Elon Musk tweeting about it and all these other people that are speculating and it's moving things around. I just think that talks about how things are, I think the future of, investing in the money management business is just going to be different than the past. It's not going to be, you've got to go to a big bank and you have to pay someone who pretends that they're really smart, or maybe they are really smart, a whole bunch of money because they have access to exclusive research that someone else doesn't have. I think it's an interesting saga to see how it's all playing out. But what's funny, Jake, is you said, stock guy 43 or whatever you said. I listened to a podcast about this last night, kind of about how everything has transpired. And the person who put together the thesis on one of the primary stocks that's just skyrocketed, that he recorded a video on YouTube and put it out in August. And the guy's name on YouTube is Roaring Kitty. To your point, I guess that's what he goes by.
It's crazy.
Yeah,
But
it is.
you drive a good point there that maybe there is going to be this much more transparent way about it, which I agree with. I don't agree with these yahoos though. And here's the problem. And maybe this is a good thing though, because I was listening to the news this morning, and there was somebody on there, I think from Washington, saying that there needs to be more regulation to prevent this type of activity. And then there was somebody on there saying, why? Well, he was arguing, the person that was saying why is like, isn't it a good thing that, you've got millions of Americans that don't invest any money in the stock market?
Correct.
And now it is front and center, and they're dabbling in it perhaps. And he said all investors lose money at some point, right? Everybody has that investment that's lost money. And his argument was maybe if they lose money, maybe that's a good thing and they learn a lesson from it. Right. So, there's two sides of it. So I normally don't like more regulation. I think something should be done though to, negatively influence this type of behavior, or maybe like that other person said, maybe it's just time for people to learn a lesson.
Yeah. What do you think? How do you feel though about yesterday? Well, as of we're recording this, within the last few days, there were a number of the big brokers that restricted buying the shares, and you could only sell shares.
I think that's their right. I think I don't know if I agree with that, but I think it's their right as a brokerage house. I mean, and if you don't like that, you can take your money and move it to a different platform that does. But that's my point. Is you don't want to bet against Wall Street, because if they lose, they're just going to change the rules.
Right. Yeah. That's
so you have to be careful, right? So let's talk about the second part of this topic of the show. So what are we going to do about it? Now, before we go into that, quick plug for our show. If you could hit the subscribe, I always forget which side they put it on, the subscribe button. Our subscriber count is growing. So thank you so much for tuning in. And if you like our content, please give us a thumbs up. I think that gets our content in front of more viewers on YouTube or more listeners on your favorite podcast platform. And a quick commercial, Cory, why don't you give a plug to your show and your podcast?
Yes. So if you subscribe to the Falcon Wealth Advisors collective that Jake's referring to, I also have a show on there called In the Money Insight. And please feel free to check out those episodes in addition to what Jake's doing here on Upticks. And if you're a subscriber, you'll be notified when both shows release new episodes, so you can stay up to date with, what we're talking about and what we're doing.
Perfect. Thank you, Cory. All right. So what are we doing at Falcon Wealth Advisors? And we've been busy, right? Because the phones are starting to ring a little bit more, and not with questions. What's bothering me is there's this fire in people's eyes, and they're glazed over, and they want to jump on this bandwagon. And I am highly encouraging our clients to steer clear. We are not going to go buy a stock after it's up 1,000% with no fundamental reason. To me, that's the exact opposite of what you should be doing.
Right. And
so just to bring it back, again, as a client calls in, says they want to drop money in one of these stocks that's going hyperbolic, my response is, let's look at your financial plan first. Or let's have a 30-minute call or a full meeting, and let's talk about the risks you're taking. And let's not throw out the years of planning and saving that you have done to jump on this hysteria.
And to add to that, Jake, most of our clients have accumulated, the wealth that they have over 20, 30, 40 years of working hard and saving. Why would now be the time that they want to risk that to try to get rich quick, right? I mean, the reality is, investing, saving methodically, automatic for a number of years is how you, I'm going to say get rich slowly, right? That's not the best way to put it, maybe, but maybe it is. My point is, don't blow that up now.
Right. And it's great. And more power to you. If you're watching this and you made a ton of money.
Right. Yeah. I'm not going to frown upon someone for,
But I also congratulate lottery winners.
Sure.
And I congratulate people that win at slot machines.
Right.
And I congratulate people. What's that?
I said, or the roulette table. Yeah, exactly.
Yeah, or the roulette table, or whatever. Right. Whatever. Raffles. Congrats. Good for you. You gambled and you won. That is not what investing is, though. And that is not certainly what we do at Falcon Wealth Advisors. We do not gamble. Now, what I'd be amiss if I said, sure, in our 35 stock portfolio, if one of our stocks jumped up 1,000% because it was one of the chosen ones that people, yeah, that's great, but we're not going to go chase it. And if that happened, we would sell it. We would sell it probably that day, because we would recognize that that was completely unwarranted. The stock would be completely overvalued, and it made 0 sense to own it anymore.
And we would say congrats to our clients and to each other, and
Right,
we'd move on.
right.
Yeah.
Right. And you know what's funny though? The reality is there's stocks that do this every year. You just don't hear about it. There's stocks that have huge run-ups every year.
Yep.
And there's stocks that go to zero every year. Right. And so that's what you got to be careful of. You don't get caught up in the hoop. And if your neighbor or your coworker or your brother-in-law or your sister-in-law or your cousin, whatever, they're claiming that they made thousands of dollars, good for them. Right. But again, they got lucky. They got lucky and they gambled, just like they get lucky when they win at the casino. Right. So, but that is not what, that's not what the stock market's intended for. And that's why I think this is a fad. It's a flash in the pan. I think people are going to lose a lot of money.
Yep.
And it's going to find its center just like everything does. So we're way over here now. And this is
equilibrium.
Right. And it's going to get back and people are going to lose, or regulators are going to step up and change the rules or whatever they got to do, because that's not what the system was intended for. And so when you abuse it, it means something will change. Either you're going to get burned or they're going to change the rules.
Yep. Yeah. Sadly, I think with that, we've seen speculative manias like this before. And I think we know how the story ends. It's just a matter of when.
Right. Just because my car can go over 100 miles an hour doesn't mean I'm driving down state line going 100 miles an hour. There's a speed limit. Or if I was stupid enough to do that, I would probably end up getting in a wreck and having a bad consequence. Right.
Yep.
So
but
that's what's happening.
And the last thing I think I want to add to what you're talking about though, Jake, is the fact that, this video, the things that we're talking about here today, if somebody went and posted this on these forums, right, or these chats or these threads, most of the people, not all of them, but a lot of the people that are engaging this behavior would say, well, we don't care about what these guys think or what they say. Okay, fine. So be it. Right. But I think that, our clients that hire us, they do. Right. And we know why they've hired us, so they can plan for retirement, retire comfortably, and stay comfortable in retirement. But These people out there on the internet, they don't care what I think or what you think. Fine. So be it. But they're not our clients either.
Right. Exactly. You're very good point. Our clients are paying us a fee to do two things for them: take care of, monitor, tweak their financial plan, and help them make very important financial planning, retirement, tax planning decisions.
Yes.
And two, invest their capital wisely and stay, most importantly, disciplined to a process and an investment policy, right? And not get caught up in fear and greed. And this is most of the time you and I are talking about fear. This is a subject on greed, and they're both bad. Yeah. So just like when I talk about clients when the market's crashing to not sell, right now I'm not telling them to sell all their bonds or whatever and buy these crazy stocks. Fear and greed. That's my job. Right? Let's stay in the center. Let's stay focused. Let's go look at that financial plan, and let's not get caught up in this market madness. Makes no sense.
And I think as advisors and clients, sorry, go ahead.
Well, I was just going to say, it makes no sense. Just like driving 100 miles an hour down state line makes no sense.
Just because you can doesn't mean you have to do it.
Right. All right, good. So I know you've got to go, Cory. Thank you so much for joining me on the show today.
Of course.
Cory and I are both out there on the social media platforms. So I'm on it. We're both on Instagram, Twitter, LinkedIn, and Facebook. Falcon Wealth Advisors, we're social. We love growing our network. So please send a friend request, share our content. This content is for our clients and for our future clients. So again, thank you so much for tuning in. I hope everyone out there is staying safe and healthy during this horrible pandemic. And I hope you also have a great week. Thanks,
All right,
Cory.
thank you.